Welcome back. Today we will present the CMA Exam Support Package P1. The questions will be presented in 2 episodes for the first part. Please follow the channel to see everything the channel publishes in the specialty of presenting CMA certification questions from multiple sources. The next episode Section D, E, and F. We await your comments and any requests for CMA questions. Let's get started. Question 1. The table below shows the estimated probabilities of the percent of defective units resulting from a production run. The expected percent defective for a production run would be A. 1.5%, B. 2.3%, C. 2.9%, D. 3%. The answer is C. Sum of the percent defective multiplied by its probability of occurrence. 2% x 0.30 plus 3% x 0.50 plus 4% x 0.20 equals 0.60 plus 1.50 plus 0.80 equals 2.9%. Question 2. Reeves Incorporated has developed a new production process to manufacture its product. The new process is complex and requires a high degree of technical skill. However, management believes there is a good opportunity for the employees to improve as they become more familiar with the production process. The production of the first unit requires 100 direct labor hours. If a 70% learning curve is used, the cumulative direct labor hours required to produce a total of 8 units would be A. 196 hours, B. 274 hours, C. 392 hours, D. 560 hours. The answer is B. 274 hours. 100 by 0.7 by 0.7 x 0.7 equals 34.3 average hours for 8 units. Total hours is equal to 8 times 34.3 equals 274.4 hours. Question 3. A forecasting technique that is a combination of the last forecast and the last observed value is called A. Delphi, B. Least squares, C. Regression, D. Exponential smoothing. The answer is D. Exponential smoothing. Exponential smoothing combines the last forecast and the last observed value. Question 4. A large manufacturer's forecast of total sales revenues for a year is least likely to be influenced by A. The seasonal pattern of sales revenues throughout the year, B. Anticipated interest rates and unemployment rates, C. Expected shortages of key raw materials, D. Input from sales personnel. The answer is A. The seasonal pattern of sales revenues throughout the year. Since the sales forecast is prepared for the whole year, known seasonal revenue fluctuation patterns should not significantly affect a total year forecast, unlike general economic conditions, sales personnel input, and raw material supply issues. Question 5. Which of the following types of budget systems most strongly supports the objective of improving communication and promoting coordination? A. Bottom-up, flexible budgets. B. Bottom-up, fixed budgets. C. Top-down, flexible budgets. D. Top-down, fixed budgets. The answer is A. Bottom-up, flexible budgets. Question 6. Carson Products sells sweatshirts and is preparing for a World Cup soccer match. The cost per sweatshirt varies with the quantity purchased as follows. Carson must purchase the shirts 1 month before the game and has analyzed the market and estimated sales levels as follows. The estimated selling price is $25 for sales made before and during the day of the game. Any shirts remaining after game day can be sold at wholesale to a local discount store for $10. The expected profit if Carson purchased 6,000 shirts is A. $64,500, B. $66,000, C. $69,000, D. $72,000. The answer is A. $64,500, as shown below. Question 7. The type of budget that is available on a continuous basis for a specified future period by adding a month, quarter, or year in the future as the month, quarter, or year just ended is deleted, is called A. Rolling budget, B. Kaizen budget, C. Activity-based budget, D. Flexible budget. The answer is A. Rolling budget. A rolling budget, or continuous budget, is a plan that always covers a specified future period by adding a period in the future and dropping the period just ended. It forces management to continuously focus on the future specified time period. The time period is always the same length, but the actual time period covered by the budget moves forward with the passage of time. Question 8. In the budgeting and planning process for a firm, which one of the following should be completed first? A. Sales budget. B. Financial budget. C. Cost management plan. D. Strategic plan. The answer is D. Strategic plan. Strategic planning drives all other planning and budgeting activities within the firm. Question 9. Which one of the following is not an advantage of activity-based budgeting? A. Better identification of resource needs. B. Linking of costs to outputs. C. Identification of budgetary slack. D. Reduction of planning uncertainty. The answer is D. Reduction of planning uncertainty. Activity-based budgeting concentrates on the budgeted cost of activities necessary to produce and sell products and services, outputs. This, in turn, will increase the identification of resource needs and budgetary slack. However, activity-based budgeting does not necessarily reduce planning uncertainty. Question 10. In preparing a corporate master budget, which one of the following is most likely to be prepared last? A. Sales budget. B. Cash budget. C. Production budget. D. Cost of goods sold budget. The answer is B. Cash budget. The pro forma statement of cash flows is usually one of the last steps in preparing a master budget. The process of creating a master budget usually has the following sequence: sales budget, production budget, selling and administrative expenses. Budgeting does not necessarily reduce planning uncertainty. Question 11. Which one of the following is most important to a successful budgeting effort? A. Experienced analysts. B. Integrated budget software. C. Reliable forecasts and trend analysis. D. Top management support. The answer is D. Top management support. Top managers determine and significantly influence how budgets are perceived in their companies. Top management initiates the planning and budgeting process and approves policies and procedures regulating it, which makes its support a crucial success factor for the budgeting process. Question 12. In an organization that plans by using comprehensive budgeting, the master budget refers to A. A compilation of all the separate operational and financial budget schedules of the organization. B. The booklet containing budget guidelines, policies, and forms to use in the budgeting process. C. The current budget updated for operations for part of the current year. D. A budget of a not-for-profit organization after it is approved by the appropriate authoritative body. The answer is A. A compilation of all the separate operational and financial budget schedules of the organization. Question 13. Steers Company has just completed its pro forma financial statements for the coming year. Relevant information is summarized below. Projected net income $100,000. Anticipated capital expenditures $50,000. Increase in working capital $25,000. Depreciation expense $15,000. From the information provided above, the increase in Steers' cash account for the coming year will be A. $25,000. B. $40,000. C. $90,000. D. $160,000. The answer is B. $40,000. Net income $100,000. Capital expenditures $50,000. Increase in working capital $25,000. Depreciation $15,000. Increase in cash $40,000. Question 14. Holland Company is in the process of projecting its cash position at the end of the second quarter. Shown below is pertinent information from Holland's records. From the data above, determine Holland's projected cash balance at the end of the second quarter. A. 0. B. $25,000. C. $60,000. D. $95,000. The answer is D. $95,000. Question 15. Werner Company buys raw materials from several suppliers and makes payments according to the following schedule. In the month of purchase 25%. In the month after purchase 60%. In the second month after purchase 15%. In preparing the master budget for the fourth quarter of the year, Werner assumed that total purchases for the quarter would be spread evenly over the 3 months. In its pro forma balance sheet, Werner anticipated a December 31st account payable balance of $207,000. What amount of purchase did Werner anticipate for the fourth quarter of the year? A. $496,800. B. $558,900. C. $621,000. D. $690,000. The answer is D. $690,000. Accounts payable at 12/31 equals 75% of December and 15% of November. $207,000/.90 equals $230,000 for month, $690,000 for the quarter. 16. Maximilian Computer Company uses a comprehensive budgeting system in planning its annual operations. Which of the following best describes the information needed in order to determine the budgeted cost of circuit boards to be purchased for use in building its laptop computer? Assume one circuit board is used in each laptop. A. Begin with budgeted laptop sales in units, add the desired ending inventory of circuit boards, deduct the expected beginning inventory of circuit boards, and in order to determine the budgeted cost of circuit boards to be purchased for use in building its laptop computer, assume one circuit board is used in each laptop. B. Begin with budgeted laptop sales in units, deduct the desired ending inventory of circuit boards, add the expected beginning inventory of circuit boards, and multiply the resulting amount by the budgeted purchase cost per circuit board. C. Begin with budgeted laptop production in units, deduct the desired ending inventory of circuit boards, add the expected beginning inventory of circuit boards, and multiply the resulting amount by the purchase cost per circuit board. D. Begin with budgeted laptop production in units, add the desired ending inventory of circuit boards, deduct the expected beginning inventory of circuit boards, and multiply the resulting amount by the budgeted purchase cost per circuit board. The answer is D. Begin with budgeted laptop production in units, add the desired ending inventory of circuit boards, deduct the expected beginning inventory of circuit boards, and multiply the resulting amount by the budgeted purchase cost per circuit board. To determine the budgeted cost of purchases, the number of units to be produced should be adjusted by the change in inventory and then multiplied by the budgeted purchase cost. Question 17. The starting point for creating a master budget for a proprietary secretarial school would be A. Estimating salaries of the instructors. B. Forecasting enrollment. C. Preparing a capital expenditure budget. D. Preparing the student recruiting budget. The answer is B. Forecasting enrollment. The master budget always begins with the forecast of sales. Tuition from students is the revenue source in a proprietary school. Question 18. Trumbull Company budgeted sales on account of $120,000 for July, $211,000 for August, and $198,000 for September. Collection experience indicates that 60% of the budgeted sales will be collected the month after the sale, 36% the second month, and 4% will be uncollectible. The cash from accounts receivable that should be budgeted for September would be A. $169,800. B. $194,760. C. $197,880. D. $198,600. The answer is A. $169,800. July's collections in September plus August's collections in September. The balance of July's sales is uncollectible. 36% x $120,000 equals $43,200 July sales on account collected in September. 60% x $211,000 equals $126,600 August sales on account collected in September. Correct answer a $169,800. Question 19. The profit and loss statement of Maidengrad Mining Incorporated includes the following information for the current fiscal year. The cost of goods manufactured by Maidengrad for the current fiscal year is A. $46,110. B. $49,890. C. $110,110. D. $113,890. The answer is C. $110,110. Cost of goods sold equals sales, gross profit equals $160,000 to $48,000 equals $112,000. Available for sale finished goods equals cost of goods sold plus ending finished goods. Inventory equals $112,000 plus $58,300 equals $170,300. Cost of goods manufactured equals available for sale finished goods opening finished. Goods inventory equals $170,300 to $60,190 equals $110,110. Question 20. The Joy Tea Company manufactures maxi dolls for sale in toy stores. In planning for this year, Joy Tea estimated variable factory overhead of $600,000 and fixed factory overhead of $400,000. Joy Tea uses a standard costing system, and factory overhead is allocated to units produced on the basis of standard direct labor hours. The denominator level of activity budgeted for this year was 10,000 direct labor hours, and Joy Tea used 10,300 actual direct labor hours. Based on the output accomplished during the year, 9,900 standard direct labor hours should have been used. Actual variable factory overhead was $596,000, and actual fixed factory overhead was $410,000 for the year. Based on this information, the volume variance for Joy Tea for this year is A. $4,000 unfavorable, B. $6,000 unfavorable, C. $10,000 unfavorable, D. $16,000 unfavorable. The answer is A. 10,000 hours, 9,900 hours, x, 400 000/10,000. Question 21. Garland Company uses a standard cost system. The standard for each finished unit of product allows for 3 pounds of plastic at 72 cents per pound. During December, Garland bought 4,500 pounds of plastic at 75 cents per pound, and used 4,100 pounds in the production of 1,300 finished units of product. What is the material purchase price variance for the month of December? A. $117 unfavorable, B. $123 unfavorable, C. $135 unfavorable, D. $150 unfavorable. The answer is C. $135 unfavorable. Standard price actual price, x number of pounds purchased. 72 to 75 cents, x 4,500 pounds equals $135 unfavorable. Question 22. Simpson Incorporated is a major consumer electronics distributor with 4 regional sales offices in major cities and 12 district sales offices in mid-sized cities in the U.S. Sal Jones is the regional director of the New York Regional Sales Office. Jones is responsible for meeting the region's sales goals and controlling the costs of the regional office and the 4 district offices in his region. The New York region is which one of the following types of responsibility centers? A. Cost center, B. Revenue center, C. Profit center, D. Investment center. The answer is C. Profit center. In a profit center, the manager is responsible for both revenues and costs, but not investments. Question 23. 23. Which one of the following best describes the performance elements contained in most balanced scorecards? The answer is D. Yes, yes. Question 24. Roberta Johnson is the manager of Sleepwell Inn, one of a chain of motels located throughout the U.S. An example of an operating cost at Sleepwell that is both direct and fixed is A. Johnson's salary, B. Water, C. Toilet tissue, D. Advertising for the Sleepwell Inn chain. The answer is A. Johnson's salary. A direct cost can be traced directly to a cost object. Salary does not vary over a set period of time and is therefore a fixed direct labor cost. The other items are either variable or indirect. Question 25. The schedule of cost of goods manufactured of Gruber Fittings Incorporated shows the following balances for its fiscal year end. Direct manufacturing labor $280,000. Manufacturing overhead $375,000. Ending work in process inventory $230,000. Raw materials used in production $450,000. Cost of goods manufactured $1,125,000. The value of the work in process inventory at the beginning of the fiscal year was A. $625,000, B. $250,000, C. $210,000, D. $20,000. The answer is B. $250,000. Cost of goods manufactured plus ending work in process equals direct manufacturing labor plus manufacturing overhead plus raw materials used in production plus work in process at the beginning of the fiscal year. Work in process at the beginning of the fiscal year equals cost of goods manufactured plus ending work in process, direct manufacturing labor, manufacturing overhead, raw materials used in production equals $1,125,000 plus $230,000 to $280,000, $375,000 to $450,000. Question 26. When compared with normal spoilage, abnormal spoilage, A. arises more frequently from factors that are inherent in the manufacturing process. B. is given the same accounting treatment as normal spoilage. C. is generally thought to be more controllable by production management than normal spoilage. D. is not typically influenced by the tightness of production standards. The answer is C. is generally thought to be more controllable by production management than normal spoilage.